Welcome back. You're still watching Bulls Charge Ahead, our special show on the markets and the kind of moves we saw this week. Fresh 52-week highs for the Nifty and huge participation coming in from names like Reliance, the telecom space and the banking sector as well. We are in conversation with the top team of Motilal Oswal. We've been speaking with Naveen Agarwal as well as Rajat Rajgarhia. Gentlemen, thank you for staying with us. Naveen, I wanted your thoughts on what's happening with the banks, because Axis Bank was the big talking point, all of last week, with the number of suitors increasing for Axis apparently. How would you deal with all this impending consolidation, and what seems to be the potential opportunity here?
So as far as the Axis merger with any other bank is concerned, I think it is right now definitely very speculative, with nobody really claiming anything, whether it is the suitor or the target. So I think this is something that is not very clear. But having said that, the big picture in the financial sector is pretty much the same that has played out over the last few years. We've had the corporate lenders which are struggling with asset quality issues. We still don't have any credible plan to deal with the asset quality issues, either from the government or from the banks themselves. And in the process, you have the private sector lenders, the private sector banks, continuing to take market share year after year, within the overall banking pie. They are very well capitalized. They have better managements in place, and they have lesser legacy issues of asset quality problems. I think all of this definitely continues into the future as well, in our view. You've already seen the amount of allocation that the budget has for PSU bank capitalization, and it is not very meaningful for these banks to be able to sustain growth rates even as much as the economic growth rates. And in the meantime, you have private sector banks which are sitting on very strong capitalization, which have great management teams, which are looking at organic growth in a strong way, apart from evaluating inorganic opportunities as well. So today you have the government holding a double-digit stake through SUTI in Axis Bank. You have LIC holding a double-digit stake in Axis Bank as well. And I think that brings about an interest from nearly every other private sector bank, because nearly half of their book is retail loans. And as far as the legacy corporate loan book is concerned, because of the asset quality review, because of the watch list, a lot of the recognition of the problem is already on the table. The elephant is on the table as far as a lot of the asset quality issues are concerned. And I think that probably gives confidence to a potential suitor to bid for an asset like this, which is obviously currently valued cheaply because of the elevated credit cost and the depressed return ratios for the bank. But whether this is mere speculation and nothing will unfold, or whether something will unfold in due course of time, is a million-dollar question.
Well, Rajat, when you sit at 52-week highs, what a retail investor will be wondering is, should I put in incremental money? So really, from his or her point of view, the question is, where will the meltdown be less? Where is he or she less likely to lose? And where are incremental gains most likely?
Well, Lata, the retail investors, as Naveen earlier pointed out, has been putting money almost every month through SIP for the last 2 years. This market, the bedrock of this bull rally in India over the last couple of years has been the domestic flows. And I think that flow should continue irrespective of the rally that we have seen from here. From specific sectors point of view, you have to still marry growth right now. Wherever you see growth and wherever you see sustaining that growth rates, those sectors will continue to outperform from here. Few things that we like a lot in particular. If you look at the whole housing finance space, I think it's almost like for the last 10-12 quarters, every quarter we keep seeing some positive catalyst coming in form of a change norm from either the government or the Reserve Bank, which keeps on making the the business attractive from an HFC point of view. There are enough number of players to play that. Second, if you look at the private sector banks, people who are not in the top 3 from market share, but the ones who are now budding to gain market share from the rest of the pack, there are enough of such names again. They will keep growing at 25-30% for the next 3, 4, 5 years. The stock returns will at least track that. Third, we also think that some of the domestic spaces, whether be it cement or autos, pockets of opportunities exist in all of them. Then some of the laggards of last many years like telecom, which have just started seeing some delivery, can be another pad that investors can focus upon. So all in all, while the overall markets may move in sync with the aggregate earnings growth, there are enough sectors and stocks where the earnings growth acceleration will be more than the market, and that's the space that retail investors should be betting upon.
Gentlemen, always a pleasure speaking with both of you and learning a lot about how to approach this markets here on. Thanks so much for joining us. But the week is now behind us. We have a fresh week upon us. Let's find out what are the things you need to watch out for. Our colleague Mangalam Malu is here with a list of the events to watch out for next week. Mangalam.
Not too many events, but still very important events. That's the kind of week that the next one is. Monday, most of them will be rubbing their eyes after the long weekend that took place. But Tuesday, February 28th, keep an eye out on important macro data coming in. We have the Indian GDP data coming out for the 4th quarter. At the same time, along with that, we have the core sector data coming out. It will give an indication to how the economy is panning out in the future as well as in the past. At the same time, keep an eye out on the US 4th quarter GDP second estimates also. That will be coming out later in the night. The markets are likely to react to that on Wednesday. But on Wednesday, which is the 1st of March, the first like the 1st of every month, we will keep an eye out on all the auto stocks. The auto sales data for February will be revealed for both two-wheelers as well as four-wheelers. Again, a leading indicator for the economy. Then March 2nd, we'll have important data coming in from Japan, the Japanese inflation data. That may give an important indication to the course that the Japanese monetary authorities will take going forward. So important to keep an eye out on that. Apart from that, also keep an eye out on Tata Motors. They have a board meeting on March 2nd to consider offering of non-convertible debentures to the tune of 500 crores. Not a very sizable amount given the size of Tata Motors, but an important board meeting to keep an eye out on nevertheless. Back to you.
Thanks for that, Mangalam. Let me now invite Ashwini Gujral to give us a technical take on the week ahead. Ashwini, well, sitting at 52-week highs, what would a Nifty trade be for next week, and any stocks you would watch?
The Nifty closed at the highest levels of all time, and both on a daily and weekly basis. Now, post some consolidation, I believe in March we should move higher. Because at 89.50, 89.60, the pressure of selling does not seem to be very high. So with a stop, say around 8800, 88.50, I think the Nifty should be able to get to finally 91.50, 9200, which was a previous high, and then even move beyond that. In terms of calls for next week, UPL seems to have broken out. So out there we can look for a target of about 820. Century Textile has bottomed out, so that could move higher, and that could have a target of about 1020. And Kotak Mahindra Bank seems to be the strongest private sector bank, and we should look for targets of about 900 out there.
That's it on this special edition of our show, Bulls Charge Ahead. Thank you very much for watching.